As I shared in the previous videos, Bitcoin has finally delivered the larger downside move we had been discussing. Price ultimately broke below the major daily low around 59,000, triggering a significant portion of the stop losses that had been building over the last 4 months. At this stage, buy-side liquidity is gradually slowing down the decline, and Bitcoin is beginning to form internal structure near the lows. The good news is that there are now several potential trading opportunities developing in this area, so in today's video, we'll break down exactly which levels I'm watching and what conditions need to be met before considering a trade. Let's start with the Bitcoin 1-hour chart. Since last weekend, Bitcoin had been building an internal bullish structure with higher highs and higher lows. However, after yesterday's decline, price broke below the key level that was maintaining that bullish structure. At this point, the sell-side liquidity event has already been reflected in price. At the same time, Bitcoin has tapped into the lower demand zone. Because of that, the chart is now beginning to show conditions where we can start evaluating long opportunities. Let's first look at the nearest long setup. After the initial reaction from demand, the current low sits around 60.7 thousand. That means if Bitcoin sweeps below 60.7 thousand, a large number of short-term traders will likely have their stop losses triggered. And once again, that creates the liquidity smart money needs to execute larger positions. Even when we look at the heat map, we can clearly see a significant concentration of stop losses sitting below the 61,000 area. Because of that, I believe there is a very strong possibility that smart money will eventually target those orders. So for me, the first condition for considering a long position is simple. I want to see Bitcoin interact with the 60.7k area. First, once price reaches that level, we can evaluate the structure and determine whether a valid long setup is developing. Now, if 60.7k gets swept but the market still fails to produce a meaningful bullish structural shift, then we need to keep another possibility open. And that possibility is a retest of the current major low around 59,000. That level could absolutely come back into play if the market fails to transition into a stronger bullish structure. Now let's move on to potential short opportunities. The nearest short setup sits around 62.2 thousand. We currently have a local high forming there, and just behind that level we can see the bearish impulse that previously broke structure and created the downside expansion. Right before that impulse sits a bearish order block, a supply zone. That zone roughly extends from 62.2k to 62.6k. If Bitcoin rallies back into that area and sweeps the high, we can begin looking for signs of weakness. Specifically, if the lower timeframe bullish structure breaks down and shifts bearish after the liquidity sweep, then we could see another significant move lower, and that would create a valid short setup. Now let's zoom out slightly. On the larger time frame, we also have buy-side liquidity sitting around 64.2 thousand and 64.7 thousand. Since Bitcoin formed a clear high around 64.2 thousand before pulling back, a large number of short position stop losses are likely sitting above that level. If Bitcoin eventually pushes beyond the current consolidation range and takes those highs, we'll want to monitor the internal structure very carefully. If price sweeps the liquidity above those highs and then produces a bearish MSS, a market structure shift, by breaking below the key structural level, that would create another attractive short opportunity. So these are currently the major liquidity zones and trading levels that I'm focused on. One thing I want to emphasize is this: when price is simply ranging between these major liquidity pools, excessive trading often increases risk more than opportunity. Until price reaches one of these key levels, patience is usually the better approach. Now let's briefly talk about the position I'm currently holding. At the moment, I'm still short XRP. I haven't taken any partial profits yet, and I'm still holding the full remaining position. The reason for entering the trade was straightforward. XRP had been building an internal bullish structure, but once that structure produced a bearish MSS and confirmed a structural shift to the downside, I entered the short position. As always, I'll continue sharing my real-time positions through Telegram. Hopefully, today's breakdown gives you a few useful ideas for your own trading. Thanks for watching all the way to the end, and I'll see you in the next video.